All right, let's get right into it. In just the next few minutes, I'm going to walk you through a complete trading strategy, starting from absolute zero. And hey, to make sure you don't miss out on more explainers just like this one, do me a quick favor and hit that subscribe button and like the video. It really helps.
So, when you first look at a price chart, it just looks like a bunch of random, chaotic lines, right? But what if I told you that it's not chaos? What if it's actually telling a story? A story about a constant battle between buyers and sellers. Today, we're going to learn how to read that story. You know, every language has to start with an alphabet. And in the language of the market, our most basic letter, our ABC, is the candlestick. If you can understand this one simple thing, you're on your way to understanding everything else.
So what exactly is a candlestick? Well, think of it like a photograph, a snapshot in time. It doesn't matter if it represents 1 minute or one whole day. Each candle captures the entire story of what happened between buyers and sellers in that period. And get this, every single one of these candles gives us 4 key pieces of intel. It tells us the price where it opened, the absolute highest point it reached, the absolute lowest point it hit, and of course, the price where it closed. Those 4 points tell us the whole tale. The color of the candle basically tells you who won that round. If the candle is green, we call it bullish. That means the price closed higher than it opened, so the buyers were in control. If it's red or bearish, the price closed lower. The sellers dominated. It's really that simple.
Okay, so if single candlesticks are our letters, what happens when we start putting them together? Well, we start to form words. And these words are patterns that give us a much deeper story about who might be about to take control of the market. Our first couple of patterns are what I like to call rejection signals. They're super powerful. They basically scream that the market tried to go one way, but got violently pushed back. Let's meet the hammer and its opposite, the shooting star.
Now, at a glance, they just look like mirror images of each other, right? The hammer pops up after the price has been falling, and the shooting star shows up after prices have been climbing. The key thing to look for on both is that super long shadow or wick. It's like a battle scar, showing a massive rejection of that price level. The story here is all about a failed attack. With a hammer, you see, sellers tried their best. They pushed the price way, way down. But then buyers stormed back in and completely took over. And with a shooting star, it's the exact opposite. Buyers were feeling good, pushing the price up, until sellers just slammed it right back down. Both are huge clues that the trend might be turning around. Now, rejection is one thing, but what about a complete, total takeover? Our next patterns show us exactly that, a massive shift in power from one side to the other. Let's talk about the engulfing patterns. The name really says it all here. An engulfing pattern happens when the second candle's body is so big that it completely swallows or engulfs the body of the candle right before it. I mean, you can't miss it. It's a huge visual sign that something dramatic just happened. And the story they tell is one of total domination. A bullish engulfing shows that buyers didn't just fight back, they came in with overwhelming force and completely erased everything the sellers just did. A bearish engulfing is the flip side. Sellers absolutely crushed the buyer's momentum. This pattern is screaming that a new team is in charge now. All right, so we can read the letters, we can read the words. Now it's time to learn the grammar. These are the rules that will let us turn those words into a coherent, actionable strategy. Let's quickly break these down. First up is CHOCH, or change of character. This is our first clue that a trend might be running out of gas. Then you have BOSS, or break of structure. This is the confirmation. Price has officially broken a key level, telling us the old trend is probably over. Next is the retest. This is so important. We wait for the price to come back to that level it just broke. That's our window of opportunity. And finally, the most important rule of all, the stop loss. This is your eject button, your safety net. It's the point where you say, I was wrong, and you get out to protect your money. Okay, it is time to put this all together. We've got the letters, the words, and the grammar. Let's build our actual strategy, starting with how to plan a trade for when we think the price is going to go down, what we call a short trade. So here's the logic. It's super simple. First, we need to see a clear uptrend. Then we just wait. We wait for that first sign of weakness, when the price breaks the last low. That's our CHOCH. But we don't chase it. We patiently wait for the price to come back up to that broken level, the retest, and that is where we enter. Our stop loss just goes right above the old high, protecting us in case we're wrong. So what about buying? What if we think the price is going up? Well, the beautiful part is, it's the exact same logic, just flipped upside down. The symmetry here is what makes this so elegant.
We spot a clear downtrend. We wait for that first sign of strength, a break of the last high. That's our CHOCH. Then we wait for the price to pull back to that same level, to retest it from above. That becomes our entry to buy, and we place our protective stop loss just below the recent low. Same rules, different direction.
Okay, so now you have it. You've got the patterns, you've got a complete plan. But I have to be honest with you. None of that matters without the right mindset. Because a perfect strategy in the hands of an impatient, undisciplined trader is completely worthless.
You have to remember you are learning a professional skill here. It takes time, it takes deliberate practice. You wouldn't expect to become our brain surgeon overnight, right? So you have to treat trading with that same level of respect. In the beginning, your only goal should be to follow the plan perfectly, not to make a single penny. Just follow the process.
And that's what makes this the ultimate equalizer. The market has no idea who you are. It doesn't care if you have a fancy degree or where you came from. The only thing it responds to is discipline. Can you follow your own rules every single time without exception? Your success completely depends on your answer to that question.
So we end with this question for you. You now have the blueprint. The plan is right here. But do you have the discipline to actually follow it? That part? Well, that's all up to you. If this blueprint was helpful, the best thing you can do now is like this video and subscribe for more explainers just like it. Thanks for watching.